Right, everyone. Good evening. It's 11 p.m. in the night in India. So I just wanted to get started with discussing what's been going on and why I'm doing this. It's key to understand that this is one of the fundamentals that some or most people should understand about trading. Uh, Without which you cannot really trade successfully. I mean, you can trade definitely, but not with a lot of statistical success. Um, and this comes with a disclaimer that this is how it works, or how it used to work before systems were developed for trading. That this is the most basic, the pretty much as basic as it gets, and this should be in your arsenal because when everything else fails, this works. All right. Also keep in mind that these lessons. This is one video where I'm trying to explain. It's just a trial. I did a live stream yesterday on my own channel, but this is intended to be something that's a bit more formal than what I did yesterday. So yeah, let's get started. Also keep in mind that I'll be injecting a bit of my experience from crypto trading. I've just started. It's been less than a year, about 9 months since I've started trading. So I'm not very good at this. As somebody who's been in the system for over a year, perhaps. But again, these people don't really have the time to go about explaining the basics to people that don't have the energy or the patience to understand what's going on. So this is intended to be a tutorial for new, absolute beginners that have no background trading and have never traded in their life before, just like me, just like when I was starting. Right. So supports and resistances, they're basic, right? What is a support? A support is a price level where price tends to saturate and stay there for a while, sometimes even bounce, right? So what you're looking for typically at a support level but is for the price to bounce after the price is coming downwards, right? So essentially when the price changes its direction or has a trend reversal either temporarily or permanently from a certain level and changes direction to something upwards, right? Now I'm not going into specifics of how this works immediately. It is key to understand how those work and how the market behaves and how traders behave when a support level is hit, right? So support level does not always stay there. It's not permanent in nature. It can be hit only a number of times before it starts to breach, it starts to break down, and the psychological impact of a support is very important. So this is a very good example where we thought the bottom was called and there was a decent bounce. This was Bitcoin. This was about 20 days ago, right? And what you're looking for at a support level is essentially the price being bounced off a certain level, the measurement of which you cannot directly do from a support. But this is essentially a price where something important happened, right? An event happened where the price was bounced off. And this could be historical in nature. So this, for example, is a very good level where previously there has been some consolidation, right? So this is one of the most basic forms of trading, and this should be very obvious to you as a trader. Finding supports and resistances is key to understanding how the price is going to function. Typically, supports and resistances are only drawn at candle closes. So, I mean, for the same purpose, I can also use the line chart. There's no particular need to use the candle chart here, right? So before I start explaining how you can trade them, there is something that you need to understand about trends and how those function, right? So what is an uptrend and a downtrend, and what is a sideways trend? I'll address the sideways in the absolute last because there's a additional facet of that I'll have to take separately. So first of all, uptrends, right? How do those work? Uptrends are very simple. Those are essentially supports that are diagonal, as in they're not horizontal, obviously, as the word diagonal will indicate. They're supposed to be they're supposed to bounce the price of some certain level. Going by the book itself, and this goes for any book, a trend line is defined when it bounces the price a minimum of 3 times, right? So because you need 2 lines to draw a trend line, but yeah, 1 second. But in order to bounce the price, it needs to hit it once more and then continue. So this is the 4-hour time frame on Bitcoin, and as you observe, the price only bounced twice and then broke it the third time around, right? The fundamental key in cryptocurrency is that diagonal trend lines don't work very well, right? Especially in a bull market or a bear market, that people are they're way too impatient to wait for a support resistance level to break down, and you see a reaction a bit early than what you would expect in a normal market. In forex, for example, trend lines stay very well, right? They tend to hold far more than normal markets. All right, so this was an uptrend, a clearly defined uptrend, which bounces the price a certain number of times, right? So this, for example, is an uptrend, and it was breached at this level. This was also where, somewhere in the region, a small bounce also occurred. But yeah, bit of an adjustment, right? So the support level was breached at this level. However, this works a bit better on lower time frames. So I'm going to head to the 15-minute chart now. And I'll come to the importance of the different time frames and which is the most important in order to trade. So this is an example of an uptrend where you had 1, 2, and 3 bounces. And at this point, the uptrend was confirmed. At this point, this is essentially a good long or a buying opportunity, because the price has already confirmed its bounce using this line, this level of this support level, and then we've continued upwards with this third bounce. At this point, this is a fairly good buying opportunity, and you should look to sell somewhere above the trend line, but then you feel that the trend is reversing, and we'll come to trend reversals in a bit. So this was essentially an uptrend. A good example of a downtrend is the one right before it. So this is a terrible example. 1 second. Right. So this is an example of a downtrend where the price gets rejected off a trend line once, almost twice, and for the third time. And this is where you sell short in order to gain from the price falling down. And simply trend lines indicate that the trend is a certain way. And when obviously, if you've had any experience from trading, or if you've at least heard it in the newspapers, maybe, an uptrend is a bullish trend. It's called a bullish trend. And a downtrend is a bearish trend. So this was a clearly defined bear trend, and this was a clearly defined bullish trend. Something to understand is something a lot of people mistake or confuse with, is that an uptrend does not have an upper boundation or limitation. It is not a channel by default. It's not supposed to be. Channel trading is one of the easiest. Channels are essentially where you can draw a channel on the price, right? But they're not supposed to be reliable. They're supposed to just indicate where the price can or most likely bounce. But trend lines are far more accurate. So yeah, as you can see, this is not a channel. It was never a channel. And therefore should not be treated as one. The support resistance trading is even better, because see, these are the levels that are very predictable. And this is, I'm going to take a better example here, just going to take an imaginary example, where, for example, the trend is moving in one direction, right? Going a certain direction. And it hits a level. And gets rejected off it, right? And I'm going to define essentially what is a bearish and a bullish trend in this method using support and resistance trading. So the price is rejected of a resistance level, right? And this changes the price, the direction of the price in one direction, in the different direction. So if the price was rising, it hit a resistance, then it continues to fall down until something happens. So one of the essential rules in trading is that anything in motion stays in motion. Any trend in motion tends to stay in that motion for a very long time until something happens, right? So I'll come to the actual price later, but for the moment, let's assume that the trend hits a support level, right? And once the support level is reached, there are two possibilities, immediate possibilities. The first possibility is that the price will bounce clearly off the trend of the support line, continue upwards, right? So essentially, this is a higher resistance than the previous resistance, right? And this resistance, once it is crossed at this level right here, will now act as a support for this trend change, right? So essentially what you would see is a movement like this. Now these angles are not supposed to be realistic. They're not, this is entirely for an example. This is supposed to be an example. It's not supposed to be anything more than that. So yeah, this is an example of a bullish trend where you have a higher high and you have a higher low, right? The greens are supposed to represent support levels. Also, they're called lows and highs. There's an alternate possibility. Well, there are two more alternate possibilities. I'll explain them both. For example, at this retrace where we see the lower trend or the bearish trend see a support and then go upwards. What if this resistance is never breached? It is never reached, where traders are feeling that the momentum isn't strong enough to take it to the next higher resistance, right? So people start to panic early. From this long position, people are looking to sell, right? Because they're clearly seeing that the momentum is not going in this direction, and certainly it's going to reverse in the other direction. And people are like the people that tend to make the market are attempting to keep the price lower in order to buy lower. There's there's a clear opportunity for people that are short selling at this level, because at this level, what happens is you see momentum flip in order to take the price to a lower level, right? Like so. And then establish a newer support or possibly an older support that already existed at this level. Keep in mind though, that this move was bullish in nature because we were making a higher low and a higher high. But when the trend is making a lower high and a lower low, the trend is bearish. Simple enough. And this is exactly what happens in the real world, right? Obviously, there's a lot of intra-channel noise. But yeah, that's what we see. So this move is bullish. Right? This move is bearish. Now, like I said, once the trend is set in motion, it tends to remain in motion. It's essentially inertia. The possibility of this trend continuing, finding a lower support level is increased if one support level is breached, right? Keep in mind though that the exact opposite holds for more supports, where they turn into resistances later on. So should the price bounce at a lower level, it will most likely get rejected at this level and then continue lower. So essentially, this is how the trend was established. Right? And this is how it works in real life. This would continue downwards and find a new level and so on and so forth. Right? Fine. So that was support resistance and trend lines. So let's try and apply this in real life and try to incorporate a few other ideas that I regularly encounter. So in order to find supports and resistances in real life, in Bitcoin especially, supports and resistances are essentially places where some action has already happened. An all-time high, a candle close on a higher time frame, a monthly candle or weekly or a daily candle. These are places where essentially action has happened, and historically these are places where the price is most likely to change direction. Not support, not resistance. They're likely to change direction, right? And I'll come to a little bit more detail later on this part. So I've just opened a new chart. At some point, I'll open my own chart as to how I trade supports and resistances, but this is how you usually do it. People have different mindsets and mentalities, so do be tolerant of those, especially in cryptocurrency where people are not tolerant by nature. And the smallest of excitement takes us overboard. It's key to be extremely calm when dealing with people, when dealing with trolls especially, which I find are both entertaining and annoying at times, depends on when they come. In support resistance trading, you can use absolutely any level that makes sense to you. It could be a wick or a shadow. It could be the candle close or candle open. That's fine. These are historic candles. They've already happened, obviously. So we're using their closes in order to predict what's going to happen on lower time frames. It is easier on trading to log those, so you don't accidentally change those when you're messing around on lower levels. At this point, we're going to establish these levels of supports and resistances. Now, why did I make this a resistance? Because the price is currently under it. And this was formerly a support where we did bounce the price here on a lower time frame, but it didn't really work. So now it's going to be a resistance, because once a support is breached, it turns into a resistance. This is called a support turn resistance. And the vice versa is also true. There's also a resistance turn support. So once a resistance is breached, it's very likely to turn into a support level. So these are the next few resistances that I can clearly see of the candles that we're going to trade, right? These are minor resistances wherever there are wicks. Essentially, the closes and opens are very, very major resistances, right? Yeah. Cool. I missed one wick here. I'm going to avoid it for the time being. The price hasn't really made it that far yet. And this is a far more important support. Now, we'll just quickly lock these. And sorry. All right. This was the monthly chart. Now we proceed to the weekly chart. It is important to find levels of support and resistance. Typically, those coincide over larger time frames, but that's a beautiful weekly candle. By predicting lower level time frames, you can predict which support is going to hold the best and the worst, right? Which one's going to be important and which one's not. For your own sake, you can change the thickness on these. Typically, that's what I do, but it tends to make a chart a little untidy. So it's completely up to you, right? Your trading mentality is reflected in the kind of charts that you make. So, I mean, if you're an untidy trader, just go ahead. That's fine. I'm a very untidy trader myself. So that's one support level, right? Where some action happened. These are historical support levels. This is 1 and 2. You can see here the price almost exactly bounced off that level. And that was a former high from a week. So this, we're using the high or the close, not using the high, we're using the close of the week of the 16th of October. The high from this week served as the low for the current week, the one we're trying to trade. Yep. So yeah, this is where all of the action tends to happen. Obviously, there are going to be intra-candle supports where inside the time frames you're going to have multiple supports and resistances. But the supports and resistances on higher time frames matter the absolute most. Like there is no substitute for those. And any pattern forming on lower time frames does not matter on the higher time frame resistance and support. It does not. This takes the most preference on the monthly and the weekly channels on the charts. Let's go to the daily. And I mean, we can spot some resistances here. This is, by the way, a good example of what happens when a support level is breached. So you see a bounce once, and the second time there was no bounce. There was a clear break of the support. So this will now function as a resistance. Simple enough. And you can continue drawing those at all levels. We proceed to the daily chart now. Right. So the first thing that you have to see is that look at the bounce on the weekly support. This was great. Look at the bounce from the former weekly support. This was also good. So action tends to happen a lot on lower time frames from higher supports and resistance levels, right? This holds for all time frames. So for example, if you draw a support at on the daily time frame, it's going to hold across all time frames below that, not above that, below that. So yeah, that's how it works. A good example, yeah, see the bounce there. It's not very exact, and it's not supposed to be. And I'll come to how you can catch those bottoms most likely in the video after this one, where I explain how you can scale in entries, how you can make entries, how you can find entries. But yeah, on the lower time frames, a good example of a former support turning resistance is right here, where this functioned as a support for 1 and 2 lows, and the support was eventually breached. We had significant problem breaking the 8200 level. We had to touch it at least 4 times on lower time frames. And that was the breach that we had. This was the most recent one. I now expect this level to turn into a support one more time. Essentially, in Bitcoin, this gets a little bit complicated because the nature of these markets are very volatile, and they're not supposed to, they're not supposed to give you clear direction, which is why it's a little tricky to trade those markets. Not expecting one level to be very exact or to hold very long. So typically, you'll want to draw resistance and support boxes instead of resistances and supports. This is something that I find works really well. And this essentially is used to draw wherever there was significant market volatility followed by activity. So for example, at this level, there's significant support here, but it broke through next time. So it's expected to turn into resistance, which is exactly what we're seeing. This level has turned into a resistance at this point. So how can we use this to predict the next resistance, right? We know this was a resistance. So if the price breaks through this level, right, it will turn into a resistance, or it will run into a resistance at this level, because this used to be a former support. You're not expecting resistance here. Keep that in mind. That this was already a resistance. This was never a support, right? So it's not going to be a resistance the next time you're going to face it. So the next possible resistance is at this level. Let's just extend this, right? You can remove some noise here by going to a higher time frame, but I recommend using boxes instead of simple lines, because that gives you the opportunity to scale in your entries. It gives you the opportunity to slowly enter into the whole range and not completely miss an entry. Um, it also gives you the opportunity to exit a trade at a much lesser loss. I'll explain that in the next video. So yeah, on a lower time frame, this phenomenon is very clear. Um, this is the 30-minute chart on Bitcoin, where you can see significant activity around supports and resistance levels. Eventually, supports and resistance is holding, right? And those can be a little amplified by moving the price up and down. That's fine. You can do that. You can fine tune those supports anytime you feel free. So this is an example of where you had a small movement on the basis of a former resistance turned support. This was the support level. This was called last night in our Discord group, because it used to be a resistance at this level and this then was broken through. This was expected to turn into a support. This was also called by multiple other indicators, but essentially at this level, this is what you're looking for. And there are other examples of this, where you have some resistance in the region. And this is why I use boxes, by the way. The wicks tend to also sometimes function as supports. This was a former resistance that we broke once and has now turned into a support level, right? So what am I looking for in my current trade? I am looking for, well, this already sort of happened, but a bounce at this level where I was expecting a little bit of support, but it did break through a little bit. Followed by, if that support breaks, a bounce at this level. This is a little less significant. So you can see the price is kind of stuck between these two. Once I see a deliberate breakout of this level, I'm expecting to see a small hesitation here where I will enter along, and then a continuation to the upside, right? Keep in mind though, that this level that was a former resistance was never turned into a support. Right? These are still resistance levels. So because this significant resistance was never turned into a support, the price is very likely to not continue upwards and go down directly after being rejected from any of the intermediary resistances, right? In which case your stop loss should be this level. So this would be your long entry. So this level would be your stop loss, this level, or somewhere a little higher than this probably. Once this resistance breaks through, should be a long entry, right? With the target being the next top. This is an extremely safe trade, in my opinion, that people should take a risk and take this one, because there is an obvious hesitation at this level. The price is reaching some equilibrium, with higher time frames going slightly or retracing slightly from their highs. This is usually a good indication because the daily does have a small reversal. So yes, that's all about support and resistance trading. There's nothing more to it. It's fairly simple, which is why it's one of the building blocks of a good trader. Uh, Great traders typically tend to not use anything else. This is economics and psychology mixed to give you a decent trade. So I'm open to taking questions. I'm taking those on the Discord, the 1x Discord Daily Traders chat. Please feel free to ask. Also, by the way, I'm going to move to my own chart now. Uh, yeah. So these levels, as you see, are almost identical. How do I gauge my stop losses? This depends on your risk tolerance. I'll give the example of this particular trade that was called out or today in the afternoon. Um, and oh, hang on. Right. Uh, Typically, all of your trades should be higher than a 2:1 risk reward ratio, right? And how do you judge those? Um, for example, you were looking for a long entry, and you've made a target, and that target is, for example, it's this level right here. Assume that green rectangle is the target for this symmetric triangle, and I'll explain charting and patterns in the next video. Your stop losses should be a give of 2 for a take of 1. Sorry, a give of 1 for a take of 2. Yeah, so that's a roughly 2:1 risk reward ratio. So, for example, if you were to enter a premature trade at this level, in order to reach for the highs of the symmetric triangle, you would need to place a stop loss at the previous low. That is an absolute necessity. The previous low always should be a stop loss, because going by support and resistance trading, say if the next resistance does hold, right? You want to make sure that the risk does not outweigh your reward in no way, right? So this particular trade would have been a decent profit. The only thing is that it didn't quite reach the target. The risk reward ratio was closer to 1.5:1, which is not bad. In my opinion, anything above 1:1 is decent, because that enables you to make more than 50 good trades a day. For a 2:1 risk reward ratio trade, you need to make only 34 correct trades out of 100 trades in order to make a break even, right? Anywhere above that is a good profit. So yeah, that's how you make your stop losses. What else? Right. So that's about it. I'm going to move to live scalping. This is something that people were really asking for. Um, I hope I don't get hacked here. All right. Oops. Typically, when I'm scalping, I don't need to have anything else open. I typically don't look at other charts, because scalping is fairly easy. I'm going to use a few indicators I've not introduced yet. And yeah. So one of our participants in the day traders launch introduced me to a different use of the RSI, or rather different configurations. It's not any different from a use of the RSI, where they were using extremely extreme charts in order to determine entries. And yeah, so essentially in this particular form of, I think candles are better for this. In this particular form of trading, you're looking for entries with the entry having to be above the RSI 95 level, right? That's very extreme. Hang on, that's not high enough. 95. There we go. Right. So any trade essentially entered at or above 95, any short trade would be an extremely proficient um, short trade. Essentially, you're catching the tops and the bottoms. This is typically what is also used in RSI bots, which is why it's intended towards bots. It's not intended towards human beings. Typically, we should have a better sense of what we're doing. But okay, that's fine. As long as you're scalping, you're making some money, right? And that's what trading is all about. And I'm going to backtest a little bit before actually getting into it. Plus, there's no good entry as far as I can see right now. Might be some rejection of this level, but it's already broken once. It's likely to break twice. Yeah, I'm going to backtest this particular trade right here. That was the only one above the 95 in the past. It looks like the past 9-10 hours. That was a decent trade, not too bad. It was a decent scalp. Had you caught the absolute top for that, very good. Yeah, that's not a very good trade though. Essentially looking for bounces of the 95 level in that case. In which case you'll have to play statistics and not hope for one trade, which is what scalping is. You're making multiple trades, all of them being in some profit, not all of it, right? So this was a good example of a trade where it touched the 95 level. Yeah, 96 was where it made it. And you should have been able to scale in a short with some weakness. This level as well was decent. It's not too bad. So was this level. So essentially, wherever the RSI has some weakness in its trend and is heavily overbought, is where you'll be scalping. There's nothing to scalp right now. Going off the SRSI though, there was a top here. Yeah, there's no good entry. You shouldn't really force an entry. 1 second. Flunky, I think I'll do with this. Thanks. So one of our happy participants is a very artistic trader. Goes by the name of Flunky. This is a good example of a former support turn resistance, like I explained. This whole block here. Oops. Has turned into a support level again, hopefully. Yep, this looks like it's going to break down. This is called rising wedge. The rising wedge is characterized by a very high sloped support followed by low sloped resistance, signaling that the bullish traders are running out of steam. This is also reflected on the SRSI, usually by a divergence. I'll explain those in a later class. As of right now, just follow. This is not turning out to be any use right now, so I'm going to close it, bring it up later. Right. Looks like weakness, boys. If this level breaks, we're going to see a retest of 7,500 followed by a lower low. But there was a higher low though. Could just be not real. There's no real shape to be made there except for this rising wedge on the higher time frame, 30 minutes. RD. Yeah. So you should see a retest of possibly 8,000. So if the 8,000 level holds, you're looking for a lower low. The next support though is at the top of the cloud now. Although this level already turned into a support. So I think, yeah, that should be it. This is a good support level, 8,100 region. This is a good support because of the top of the cloud on the early chart. Usually if you want to see a continuation, and I know I haven't explained Ichimoku that well or at all, there will be a very likely Kumo twist if the upward pattern continues before the cloud is breached. So if the price doesn't breach the cloud, we're fine. Once it's breached, though, the red can just continue. That's still bearish. Wouldn't mean anything. What we're going to see, though, is a C-clamp. The Tenkan and Kijun eventually will have to come together for the equilibrium to be achieved. Yep. A very common form of wanting to lose your money is on this time frame. This is called the cocaine candle time frame, the 1 minute time frame where the degenerate traders gamble their money away. It's fairly useful. It has its purposes in making you lose your money, but it can turn into a fairly useful tool when you're trying to scalp, especially. So this, for example, was along that I just missed. Yeah, sometimes the 1 minute chart is decent, but it doesn't last very long. It's not supposed to trump higher time frames. I'll just stick to my 5 and 15 charts. I really don't want to get back to this. It does look like we're going to breach the support. Looks fairly likely. That would be the support, yeah. No, hang on. That's a completely different support. Sorry. That's this bottom. 1, 2, 3. Yeah, that's this bottom. Rising wedges have a slight bearish tendency. They do most of the time breakdown, and this is how they do breakdown. We have a steep decline where we come to retest the previous bottom. Let's make this red. Followed by a small move to the upside, typically to retest the breakdown zone. This is called the breakdown zone because that's where the price broke down from. A continuation lower. So this level right here, the retest is what you're looking to short, if at all. So I'm not going to short here anyway. What I'm looking for is a lower high after this level is breached. Because that's what the pattern dictates. Typically, if you want to enter a trade, there's 2 times to do it. The first time to do it is right here when the price breaks down clearly and then bounces up a little bit. And then the second time is the breakdown zone where it will eventually come to test it. I've seen it 9 out of 10 times where the price comes to test the breakout or breakdown zone. And it's reasonably predictive. It could bounce here. There's a small possibility of it going up. But it's a rising wedge. There's only so much it can go for. Typically, when you're in a long-term bullish pattern, even from rising wedges in Bitcoin, the price tends to break upwards instead of downwards. This happened a lot in the FOMO rally from the Bitcoin price from 5,000 to 20,000, where even every bearish pattern was breaking upwards. And now we're seeing most bullish patterns. One of the most common ones is an inverse head and shoulders. This was one example. Breaking upwards a little bit and then continuing downwards. Might just take this opportunity to explain divergences. I'm also chatting side by side in the trading. How I would figure at the TD9. All right. I'm assuming that there's a red count to TD9 here. One to four candle pullback, then continuation. Now the continuation depends. We had a 9 here, and for the newbie traders, you need to ignore this. You had a 9 here followed by a run to 9 here. Now this is ideally a good call for a long. Typically, if you have a green one followed by a green two, the green two is very long, not the green one. This is also a decent support. It's not too good. There's been a lot of chop at this level, so there's been activity. There's that. But I would have expected this level to hold. It quite did not. There's a fairly odd chance of it getting rejected at 250, 8250. However, if I see a green two above a green one, I'll start to long, with the target being the higher end of the trade. Even then, though, on the larger time frame, starting to look a little bit on the weak side. Right, this is how I would go about making multiple supports and resistance levels should the price bounce here. This support hasn't been tested more than 2 times. I shouldn't be using this one. Okay, there's no technical diagonal support here. For the cloud traders, though, just observe the cloud, see what it's doing. The Kumo is flat. The leaning is a bit bearish, man. See how the conversion line is reacting. It's starting to go flat. Typically, flat means a possible change in direction is coming. I'll take this time to explain a few things about how you should handle your money. Do I have enough viewers though? But that's not bad. 37. That's decent. Yeah, that 1 minute rally got screwed over. Also, apparently the Discord invite link isn't working. I'll just update it in the YouTube description after this video is done. Small pumps don't mean anything. The 1 minute time frames don't mean anything. I've learned that the hard way. I recommend you learn it the easy way by not losing money. And yeah, so this is going to run to a 13 most likely. Test the 8,000 support. Yeah, the YouTube, the Discord link has been updated. Something to understand about crypto is that everybody's out for your money. This is not a mature market, neither is it regulated, nor is there any oversight. So essentially, the risk management, the money you can gain or lose is left to you for to decide, right? And at this point, if you have Bitcoin, oh what? Yeah, if you have Bitcoin, just preserve it. If you've just started investing or you think you're going to be a decent trader, you're most likely not going to be a decent trader. There's nobody who can do it the first time around. Um, you're not supposed to, right? And that the rising wedge just broke down. Yeah, it's going to retest these support levels. I predict an end-to-end trade. I'm not going to enter one right now. I'm going to wait for a cloud bounce, and then um, the thing about crypto is that there is a very small barrier for entry. Anybody that has $10 can, um, you know, put in money into Bitcoin or any other cryptocurrency. So there's a few things you have to watch out for. And I'm really sorry for the scrolling. It's really annoying. I understand. Um, what you're looking for is first, the primary motive is to not lose your Bitcoins. I mean, the short-term value of Bitcoins can go up and down. And this can happen within a span of days, right? You want to usually buy a retrace, and the current behavior of the markets is fairly equal to a retrace, I would say. This is the biggest retrace we've seen for a very long time. Um, and in my opinion, we could go a little bit lower, probably to 4,800. That's the worst possible case. I mean, there is one more possible case, 3,000, below which there's a lot of support levels. Right? You can't possibly not bounce there. But yeah, if you want to buy Bitcoin, now is a really good time to start scaling in. But do not, first of all, give your money away by trading on BitMEX. That's a very bad idea. Do not give your money away by investing in something that you know will not work. And I'll take this opportunity to introduce you to BitConnect. That's Bitcoin Cash, Longcoin. Yeah. That can't be right. Right. Okay. How long ago was this? So this is typically what happens when you put in money into something you don't believe in. No matter where you bought, unless it was at these levels, the price is probably lower than your entry, right? And another one of this is a good example. Ripple is a great example here, where you can see even on the daily chart, the price is extremely bearish. Um, and there's really nothing supporting the price except these levels, right? So Ripple went from the top was $3.3, where it got shilled by mainstream media, and it's currently resting at 0.73, which is roughly 80 cents. And anybody that bought in the rally got screwed over. Unless you bought somewhere at the lower end of it, and you probably sold somewhere higher in the expectation for it to go lower. Just don't put your money into something that you don't believe in. And it's a very good idea to actually search the fundamentals of those coins as to how they work, why they work, and not put your money into ICOs until you truly understand what's going on. And that because this is an unregulated market, you need to think of this way. How similar is this to the startup bubble? And the answer is very similar. The startup bubble was not shown everywhere. And the extent of it, it is not available for everybody to see because it's not that televised. But the startup bubble didn't go very well. Essentially, companies that start off one technology, very few of those companies actually last. And even coins with great fundamental value typically retrace substantially. So there is no distinction between what's good and what's not happening, right? And typically, something that I've seen on Twitter today was the example of a comparison between Yahoo and Google stocks, and that the market truly doesn't realize the value of technology until, uh, you know, that it doesn't realize the value of that technology until the price actually goes up, right? So I'll just go see if I got the ticker. All right, okay, right. This was the Google price, and ignore that dip. I'll come to that. The DJI thing. Um, so back when Google started, the average share price was about $102. Uh, and let's just see what date was this? This was the 14th of, let's assume the high here. That was the 31st of January 2005. Let's see Yahoo stocks on the same date. Right, I'm not getting data, but the tweet simply was that it took the market about 5 years to realize what the worth of Google was, right? And that anything with decent fundamentals, anything with a great developers team is going to make it, and anything that is not going to make it. That goes even for cryptocurrency, it goes for everything else. Um, so don't put your money in something you don't believe in. And if you don't believe in crypto, if you're here for the gains, well, at the moment there are none, unless you're a good trader. From a long-term investor's point of view, you are probably going to wait a little bit for a reversal confirmation before you start investing. From a trader's perspective, unless you have experience, significant market experience, and are willing to lose a little bit of money to learn, you're not going to make a profit. Just not. There's no way to do it. Not in this market, right? So don't rush in for the profits. If you're in for the technology, though, I have good news for you. It's probably going to outlast us. The blockchain is going to be here for a very long time, and Bitcoin is going to lead the way. So yeah, that short trade would have been good from the rising wedge. The rising wedge was right here, I think. Cool. So I think that's it for the day. I hope you enjoyed the live stream. I probably will be coming back maybe in a day or maybe a couple of days. Thank you for watching. Have a nice day.